Hello guys, this is Mr. Market Switch. Hello, hello. Can you hear me guys? Can you hear me? I want to know if you guys can hear me. If you can hear me, please write something on the chat page. Write something on the chat page. If you can hear me, please write something on the chat page. It's very important, guys. It's very important. I want to know if you guys can hear me. I can only see some few people online right now. I want to know if I want us to give some more room for other people to join us before we begin our session today. Let us give some more room for other people to join us. I can see Mr. Helman Alfred. Mr. Helman Alfred, I can see you, and I can see you're the only person active right now. Maybe we can give some more times for other people to join us before we proceed. All right, all right. Perfect, guys. As I told you earlier, that for those who didn't attend our previous session concerning profitable candlestick patterns, I would advise you guys to go through that presentation because it's already on YouTube. It's very important for you guys to go through it because you cannot understand today's presentation if you haven't gone through the previous presentation. It's very important because today we're just going to connect with what we already covered last time concerning profitable candlestick patterns. So today it's another day, and I would like to present to you another package concerning candlestick patterns that's very important. Remember last time we discussed about pin bar and how to apply pin bar, or how to confirm a trade using also a pin bar. Remember guys, you cannot just make a decision in the forex market, either buy or sell, just by looking at one criteria. It's not only by looking at candlestick pattern formed. Remember what I said earlier, what I said in the previous presentation. I told you that knowing about this profitable candlestick pattern will just add something on what you already know about forex market. We just add more confirmation on your trading strategy. You see guys, so understanding better about candlestick pattern and what they imply in the forex market is just another confirmation to confirm your trade or to look at before taking a position in the forex market. And it's very important. And I told you that there are people in the world who are just trading using candlestick patterns, but uh, according to my experience, I have not seen it very effective trading it alone without including other confirmation. So that's why I advised you guys to use these candlestick patterns as another confirmation, as an additional confirmation on top of what you already know about forex market. So we discussed something about pin bar, and we also saw how it's important to look at it on either supply zone or demand zone, or sometimes you can refer it as a resistance or support. Wherever you see, whenever you see a pin bar forming at the resistance or at the support, is another confirmation that maybe reversal or a pullback is nearby. So it's very important, guys, to look at that. And we saw a lot of examples concerning pin bar. So today we're just going to discuss, or we're just going to look at another profitable candlestick pattern, and that is Doji candlestick pattern. Doji candlestick pattern. And I'm going to share my screen now so that we can go through it before we go to the real examples. Remember, we are just going through a theory part. Then we go to the real example in the market, or the real stuff in the market, and see how these profitable candlestick patterns are powerful in the confirmation of your trades. So, guys, this is Doji candlestick pattern. As you can see, it's our second candlestick pattern that we are going to cover today, and we are going to discuss about it. The Doji candlestick patterns. You see, if we have been observing forex market very careful, you can agree with me that you have come across this kind of stuff. You see some things or some patterns formed in the market just like this. They do not have a body. They just have a wick or a shadow and another line at the middle, or somewhere at the low, or somewhere at the high, or some other long shadow or long wick just like this, and the result line just there. So you see, they do not actually represent either a bullish body. They do not have a bullish body or a bearish body. They just have a line. You cannot tell if this is a bullish candlestick pattern or a bearish candlestick pattern. It's just a line. They do not even have a clear body to represent a certain type of market, or either bullish or bearish. They just have a line, just as you can see. So the Doji candlestick patterns of different structure. You can find a Doji candlestick pattern with just a short shadow or a short wick, the short wick at the top, and a short wick at the bottom. You see, and just a kind of line at the middle. You see, guys, this is what I'm referring to, and I'll tell you what it implies or what it means by this line. Or you can also find something like this. You can just find a pattern, just having a shadow on one side or a wick on one side, and you see something like this at the bottom. Or you can see another pattern having something like this, a shadow at the bottom, and or a wick at the bottom, and just a horizontal line, a short horizontal line at the top. Or you can just find another pattern having a long wick at the top, a long wick at the bottom, which is, we refer it as a high wick, a low wick, and something there at the middle, just horizontal lines at the middle. This horizontal line doesn't represent or doesn't have a clear border of a certain market, or bullish or bearish. Just a simple horizontal line, just like that. Now, how do we call this one? We call this one a Doji, just a Doji. Number B, we call this one as a gravestone Doji. Why is it called as a gravestone Doji? Do you remember, or do you know the stone that covers the graves? They just look the same, like this. They just have something there at the top that you can just handle it, just like something that you can just use it to open a grave. You see, so this one stands as a gravestone Doji. They refer it as a gravestone Doji because it looks like a gravestone cover. See, guys, that's what it means. Now, the other one is a dragonfly Doji. A dragonfly Doji. It looks just like a dragonfly wick or dragonfly a dragonfly wick. That's why it is called a dragonfly Doji. A dragonfly. It looks just like a dragonfly. That's why it is referred to as a dragonfly Doji. And the other one, the last one, is called a long-legged Doji. A long-legged Doji. Why is it called a long-legged Doji? It is called a long-legged Doji because it has a very long shadow at the top and another one at the bottom. That's why it's called a long-legged Doji, because it has a long wick or long shadow. So, guys, what does it mean by Doji candlestick pattern? Or what does it imply? What does it mean? What does it imply when it doesn't show a clear presentation of either bullish or bearish market? Or why doesn't it have any representation of either bullish or bearish market? It's because this one is formed as a result of balance between bullish and bearish. That means there is no winner between buyers and sellers. There is no winner between buyers and sellers. The market is saying that now the market is indecision. It is neither buying or selling. It is neither buying or selling. So the market is in indecision. The market is indecision. It has not decided yet either to buy or to be in a bullish momentum or in a bearish momentum. So that situation results to the formation of Doji candlestick pattern. And that's why you cannot see the body of bullish market or bearish market. Why? Because the market is indecision. The market has not showing yet who is now in control of the market. Who is now in control of the market. And that's why you cannot see a real presentation of either buyers or sellers in this patterns or in this kind of market. And that's where there is a formation of Doji candlestick patterns. But this is very important, guys. But when you see formation of Doji candlestick pattern, when you see formation of Doji candlestick pattern somewhere at the resistance or somewhere at the support, it is a very good indicator of a reversal candlestick pattern. Or the market is just trying to tell you that we are just approaching, or we're just now at the moment where the market can reverse at any time. Why? Because this kind of pattern formed in the market tells you that the previous momentum, the previous trend of the market is now ending. And now we are just going to face a reversal of the market. So where do we look, or where can we effective trade using Doji candlestick pattern? We can effective trade using candlestick pattern on a trending market, either uptrend or downtrend. Why? Because when you see formation of this Doji candlestick pattern in a trending market, when these Doji candlestick patterns are formed either in a resistance or support of a trending market, it's a good indicator that the market is now facing is now decreasing its momentum. The trend is now exhausted. The trend is now exhausted, and a reversal market or a reversal of the market might happen anytime soon. So guys, it's very important. Remember, the candlestick you see, the candlestick patterns in the market are not just happen without the meaning. They mean something. So it's up for you, it's up to you guys to understand what the market is telling you, because every now and then the market is saying something. The market is saying something. And if you don't know the language of candlestick patterns, you might see just like a normal situation. But for a trader who knows candlestick language, understand well what the market is trying to say. Now, guys, let me show you an example. Let me show you something here. Let me draw something here. Let's say this is a downtrend. Let's say we have a downtrend here. See, we have a downtrend. The market moving down. But after the market reaches somewhere at this point, now formed something like this. Maybe we have a candlestick there. This is just a normal candlestick pattern. But we have now something like this. Have now something like this. What does it imply? This one now tells you this previous trend is now decreasing its momentum. Now, because we have this kind of Doji candlestick pattern formed at the support, this is now a support, the support, it tells you that anytime soon the market might do what? The market might reverse. The market might reverse. The market might reverse. We go to the MetaTrader 4 and see the real examples, and you understand better about this when you go there. You understand better about this when you go there. So don't worry, guys. So you see, before this movement happened, before this bullish candlestick formed, you can see there was already information given. This was an information. This was a pre-information that we might have a what? Change of trend. This was a downtrend. Now we are having an uptrend. But before this uptrend happened, we had an information. We had a call. A call. So for traders who doesn't know about this, they just take it as a normal situation. But this is not normal. If you know about this, you can use this in your at your own advantage. So guys, this is how this is what it means by Doji candlestick pattern. Now let's go to the real example. Maybe this one is very important. Let's go to the real example. Let me show you guys. Let me show you here. You see, this is guys is now pound USD. Do you see? This is now pound USD, GBP, Great Britain pound, and USD. If you take a look at this, if you take a closer look at this, you see, if you take a closer look at this, for those who are trading using Doji candlestick pattern, before this movement, you can see we had a pin bar here. So this pin bar, it was an information. It was a call that now we are facing a reversal. Remember, it was a what? It was a downtrend. It was a downtrend. We had a downtrend there. The market creating a W pattern double bottom, but inside we have what? A pin bar. You see, it's an additional confirmation. Regardless of having this W pattern, we have to look at the other confirmation. We have a pin bar. So W pattern, pin bar, then support. All these are the confirmation of reverse. Support, the market is at the support, forming W pattern, but also we have a pin bar there, just at the beginning of second leg formation. Then if you have that, you have all those information, then you can take a trade confidently. You can take a trade confidently, knowing that you have all confirmation in place. Now, let's take a look at this. Let's go to monthly time frame. We discuss about this. You see this one here, guys? You see this one? I hope you can see. This is a monthly. This is a monthly time frame for GBP USD. GBP USD monthly time frame. You can see now the market is just near, almost near to the low of all the time. But you can see the market is just at the what? At the support, monthly time frame. But if you just if we just expand that one, you can see before this move, before this bullish movement here, the market formed a long-legged Doji candlestick pattern. Do you see this long-legged Doji candlestick pattern, guys? You see this long-legged Doji candlestick pattern. You can see the line at the middle doesn't represent either bearish or bullish. It just like a line. You see, this is a long-legged Doji candlestick pattern. You see it there, guys. So you can see it was formed just at the beginning of the second leg. See, now this is a Doji candlestick. What does it imply, or what does it tell you? What is the information that is provided by this Doji candlestick pattern? It's just now trying to tell you that we are now, the previous trend, which was this one, the previous trend, which was this one, is now exhausted. And we might face a reversal market anytime. And that's why after formation of this, you can see the market just reversed. The market just reversed, guys. This is how powerful these candlestick patterns are. This is Doji candlestick pattern formed just at the what? At the support. Not only that, you can also see here, guys. You can also see somewhere here. It was formed. We had a formation of also long-legged Doji candlestick pattern before this bullish movement here. Although it had, although we had a pullback down before upward movement, but you can see the market respected this one, the information provided by this Doji candlestick pattern. The market respected this one, and you can see the market went up for some pips. Remember, this is a monthly time frame. That means the movement here is a lot of pips, guys. You can just imagine this movement from here to here is already for about 400 pips. It's already about 400 pips. If we just go up again, you can see it's about 592.2 pips. So it was not just few pips, it was a lot of pips. If we can just count the pips from here to this point, you can see it's almost 400 pips already. The market has already moved 400 pips up just after the information provided by this Doji candlestick pattern here. So it's very important, guys, for you to focus on this. It's very important for you to understand about this Doji candlestick pattern, because they just add up on already on what you already know about forex market. Now let's go to 4 hours time frame. If we go to 4 hours time frame, just take a look at this. Let's see if we can find a Doji candlestick pattern formed, not necessarily current, but also you can see if it was formed in the previous time and the market obeyed. You can see this one here, long leg Doji candlestick pattern forming at the resistance, and you can see what the market did. If these Doji candlestick patterns, are formed at the resistance, that means the market might reverse anytime soon and on bearish trend. If it is formed at somewhere at the support, that means it's an indicator for bullish market. So it can be used anywhere. Just look at the zone or at the area if it's a supply or demand zone. It's very important, guys. Now, you can just take a look at this one. this was a long legged Doji candlestick pattern formed just at the resistance. Then you can see what the market did. The market moved down big times, guys. The market moved down a lot of pips, You can see the market pushed down, downtrend. You can see about 408 and 8 pips. This is 4 hours time frame, guys. 4 hours time frame. So you can see that one. These are the pin bar. We already discussed about the pin bar. Pin bar are powerful and are frequently formed. So pin bar, I love trading using pin bar as my additional confirmation because they are frequently formed and they are very powerful, guys, than any other candlestick pattern. So you have to focus more on pin bar. You can see the pin bar. You can see another pin bar there. So pin bar, Doji, the most powerful candlestick pattern that are formed. We'll come to discuss about other candlestick pattern like railway track, discuss about Morobos candlestick pattern, discuss about bullish engulfing, bearish engulfing candlestick patterns. But this one are the most important, guys. Doji candlestick patterns is also the powerful one, the powerful candlestick pattern that you need to understand when trading in the forex market. Let's see it here. You can see this one long-legged Doji candlestick pattern formed at the resistance. Then the bearish market. We had another one. Let's see. We had another one here. Long-legged Doji candlestick pattern formed at the support. You can see every time it's formed also with another confirmation. You can see W pattern here, guys. You can see W pattern here. You can see W pattern here. And on the W pattern, you can see Doji candlestick pattern and the other candlestick pattern like pin bars. See, guys. So it's very important. It's very important. You can see the pin bar here. Sometimes you can refer it as a hammer, but also, all those are type of pin bars, hammers, pinning top, and so on and so forth. So you have to look at it, guys. It's an additional confirmation. It's an additional confirmation of the reverse. So wherever you see that, and you see another pattern like W pattern, then you see Doji or you see pin bar, it tells you that the market is indeed going to reverse. So guys, it's very important. It's a very powerful thing to consider when trading in the forex market. Now let's see if we have some more examples. Let's see if we had some more examples. All right, guys, we are back. We had some problem with the internet, but we are back right now. Let me share my screen again. We have to move on, guys. We have to move on. We have to understand everything about these stuffs. All right, let's go back. Let's go back, guys. Okay. This is what I was just trying to explain about. Remember, we're talking about Doji candlestick patterns. Pin bar and Doji candlestick pattern. We're just trying to combine both so that we may move together. I'm trying to combine pin bar with Doji candlestick pattern because pin bar are the most profitable and the most occurred candlestick pattern in the forex market, and they are the most powerful one. Okay, let me see if we have some more examples of Doji candlestick patterns before we move into something else. Because today I want us guys to learn how to trade Doji candlestick patterns and pin bar candlestick patterns in a more precise way, in a more precise and profitable way. Okay, let's see if we have some more examples on 4 hours time frame or daily time frame. See, sorry. Okay. Okay. Let's see Euro GBP on daily time frame. Let's see on daily time frame. Okay. All right. Do you see on daily time frame? We have a very good example here, guys. Very good example of long leg Doji candlestick pattern. Do you see it here, guys? You can see this one here at the middle. You can see the market. Remember, the market was on. The market was on uptrend. Was moving up. Was moving up. The market was moving up. See, the market was an uptrend. Was on uptrend. See, the market was on an uptrend, guys. The market was on an uptrend. But after reaching at this point, to show that the previous trend is now exhausted, the market formed something like this. You can see long-legged Doji candlestick pattern just at the major resistance. Just at the major resistance. You can see it here, guys. Let me show you very clearly. Let me show you very clearly. I want to show that this is a major. I want to show you that this is a major what? I want to show you that this is a major resistance. You can see this point here, and when you come to this, you can see exactly that this long-legged Doji candlestick pattern was just formed at the strong resistance. Why strong resistance? Just take a look at this and see. This is the resistance. There was a rejection here, another rejection here, and now we have a rejection here. Why? Because it's a strong resistance, it's a strong zone, or it's a supply zone. It's a supply zone. And now, to show you that the market is now going to reverse, to show you that the market is now going to change the trend, the market decided to form Doji candlestick pattern there. Now, let me tell you something else. Now, this is according to my experience, guys. This is now according to my experience. Whenever you see this candlestick pattern, pin bar formed on daily time frame in any zone, either resistance or support. I repeat again. Whenever you see Doji candlestick pattern or pin bar or any profitable candlestick pattern formed around the zone or a resistance or support in a daily time frame, and you can see that it has been formed in a strong resistance or strong support zone, in a major resistance or a major support zone, in a major zone, demand or supply zone. Guys, I insist, I repeat again, whenever you see that one, Doji, pin bar, or any profitable candlestick pattern formed in that area, in a daily time frame, it is a wonderful indicator. It's a wonderful indicator that the market might reverse anytime. The market is going to change direction. It's going to change a trend. There will be a change of trend anytime soon. And this is what happened, guys. This is what happened here. This is what happened here. You can see Doji candlestick pattern formed at the major zone. You can see at the major resistance, demand zone. We have now triple top formed there. Don't mind this one. This one was a hunting. Don't mind about this one. Guys, so whenever you see that one, it's another confirmation. We have triple top, but we have Doji candlestick pattern. Now you take a trade confidently. Guys, do not hesitate to take a trade after all those confirmation. You take a trade confidently. What do I mean? I mean this. If somebody decided to sell after seeing all those, after seeing triple top, after seeing this area, the market is now at the resistance, after now confirming with a Doji candlestick pattern form, now the next candlestick is yours, guys. The next candlestick pattern is yours. For aggressive trader, don't wait a minute, take a trade and go to and hold until the market speaks something else. If I were you, if I was you, I could take a trade and just delete that account from my MetaTrader 4 and hold it for months. Why? Because it is a daily confirmation. It is a daily confirmation. Daily confirmation is for any trade is now a swing trade. The trade is likely to be a swing trade. And a swing trade you can hold for weeks, you can hold for months, you can hold for days. You just delete, you just forget about it. You just forget about it, guys. Just imagine for somebody who took this trade and hold it. You're now sitting at almost 500 pips. You're now sitting at almost 500 pips. Your trades are now running at 500 profit pips, and it was not many months ago. It was just from August, from just last month, guys. If you could hold this trade from last month, 13 of last month until now, you are now at 500 plus pips. It's just 1 month. 1 month holding it. 1 month holding it, guys. How 1 month holding it, now 500 plus pips. The problem of many of us is we cannot hold blues. We are ready to hold the reds, hoping that the market will turn on our side, but we cannot hold the blues. Why? Because we are so much excited when we make a profit, and we forget to have discipline. We forget to trust our analysis and hold until we get enough pips out of this. Now, if you are an aggressive trader, you could just take a trade after formation of this Doji candlestick pattern. But if you are not an aggressive trader, you take too much risk management. You are afraid. You are afraid for some pullback. Now, where could you take a trade? You just draw. Just consider this. Just consider this shadow. You see this shadow here. You just come, draw your line at the top of the shadow, and you come to the bottom, to the low, the low of the shadow. Remember, you consider the bottom of the shadow of this long-legged Doji candlestick pattern and the high of this long-legged Doji candlestick pattern. You draw the line there and the line below. Now, how do you trade it? We normally believe that any breakout either above the high of long-legged Doji candlestick pattern or breakout of the low of the long-legged Doji candlestick pattern is telling us something. Now, since this Doji candlestick pattern has been formed at the resistance, we regard less, we consider less the breakout of the high. So what we consider the breakout of the low. Why? Because we are at the resistance, at the supply zone. So the possibility is the breakout below the low of what? Of the long-legged Doji candlestick pattern. Now, you could put after formation of this Doji candlestick pattern. Now you would come and put your pending order, your sell pending order below the low of this long-legged Doji candlestick pattern here, hoping that just after the breakout of the low of this Doji candlestick pattern is a signal that the market is now going to have a long movement on downtrend, because it has already made a breakout of the low of the Doji candlestick pattern. So that's how you trade. For aggressive trader, after confirming all that, you just take a trade in the next candle. But to be more careful, you can just put a pending order, bearish pending order, below the low of this long-legged Doji candlestick pattern. This is if long-legged Doji candlestick pattern has been formed at what? Somewhere at the resistance. Now, let's consider this. Let's consider this one. Okay. You see, this is a pin bar. So if you wanted to be more careful, you could put your pending order above the high of this as a pending order, bullish pending order there, believing that after breakout of the high, the market will proceed on the bullish trend. I was just trying to find if we can find. I was just trying to find if we can get an example of a Doji candlestick pattern at the support. We have already seen a Doji candlestick pattern at the resistance. Now we are just trying to see if we can have Doji candlestick pattern at the what? At the support. We have this one. It's not very clear, but we have pin bar and Doji candlestick pattern inside this one. You can see, but we have a lot of pin bar, and then the market boom went up. I'm just trying to find what I'm looking for. Yes, you see this one. One is very clear. This one is very clear. Euro NZD daily. You can see a Doji candlestick pattern. Doji candlestick pattern here, guys. You see this one? You see a Doji candlestick pattern down there. So, if you want to be more accurate on this one, you just draw. You just put your pending order. Just put your pending order somewhere above the high. Let me expand this one so that you can see it very clearly. So this guys is a Doji candlestick pattern at the what? You can see it for me at the support. So we have that one. We have this one. It's very important. And you can see the low. This one. We have the low. So high, low. So breakout above the high is a bullish indicator. So you just put your pending order above the high, somewhere above it, so that when there is a breakout, then boom, the market up. So you can see this Doji candlestick pattern formed at the what? It was formed at the support. See, guys. So it's very important for you to consider this confirmation. It's very powerful. It's very powerful, and wherever you use it, it gives you results. It gives you results. So today we discuss. We have seen the examples, and we have seen how clear it is when trading with Doji candlestick pattern and pin bar. This happen in any pair that you can find. You can see we have pin bars, we have Doji. So all those additional confirmation for your trades. All right, guys. If I have question there before we come to the end of our presentation today, because today we do not have so many stuffs. We have few stuff to discuss. If you have any question before we come to at the end of this. Mr. Chris, can you speak, please? Mr. Chris, can you hear me? Mr. Chris. Hello, Mr. Chris. Mr. Chris, Mr. Chris, Mr. Chris, can you hear me? Mr. Chris is saying he can't hear. Can you hear me, guys? If you can hear me, please write something on the chat page if you can hear.
I can hear you now.
You can hear me now? Okay, right. Mr. Chris, where are you from? Which country are you from?
Thailand?
Are you from Thailand?
Yes.
All right. So that's great. Okay. So
yeah.
Have you got something? Have you got something from our from this presentation?
Yeah, I understand a little bit more. I'm actually a new trader, so I'm just doing still demo, but I'm trying to get to understand how the market moves and stuff. And I watch your YouTube, and I think I learned a lot more from you.
All right.
Understanding, yeah.
All right. So we have so many steps that you need to understand. One of them is understanding candlestick patterns, what they imply, what do they mean? Because we believe that these candlestick patterns or candlesticks that are just formed in the market are not just formed without a reason. They are formed with the essence behind. They are giving us informations about the market. So when we understand how to read these candlestick patterns, when we understand how to get those information that are being provided by these candlestick patterns, it will help us to make a right decision in the forex market.
Right.
So that's very clear, and I think we are very happy to have you here from Thailand. We have a person from Pakistan and other people from other countries as well. So we are glad to have you, Mr. Chris. God bless you. Keep enjoying. So, any other question, guys? If we have any other question from any other person, any other question? Do we have any other question, guys? So it's very clear now. It's all right, guys. Sorry, we had some problem with internet again, but we are back. Okay, I want to receive some question from you guys concerning anything in the market, because I can see people are still struggling with some issues, and I remember we have already covered a lot of stuff about support, resistance, trading market, ranging market. Now I want to receive question concerning what we have already covered so far. Remember today we had just a presentation about candlestick pattern, and we based the match on Doji candlestick pattern. But I want to receive question regarding what we have already covered so far in previous presentation and today. If you have any question, please, you can just ask it direct, or you can just write something on the chat page so that we can proceed from there. Any question, guys? If it's clear, and if you don't have any question, please let me know. But I believe we have many questions. Mr. Elman Alfred, do you have any question? Mr. Alfred, Mr. Hellman, do you have any question? You can speak now.
Okay. Nimependa somo zuri. In English, right?
Yeah, please, in English, because we have some people coming here, Swahili.
Okay,
yes,
no
please.
problem. Thank you very much for your good presentation. I've enjoyed and I have understood this type of candlestick pattern about Doji. I've learned something, but I'm still learning, so I don't have questions for today.
Okay.
Yeah.
Thank you, Mr. Hellman, for that. Okay, any other person? I can see some question here. Mr. Larry is asking, sir, what about stop loss? If you get the entry through candlestick pattern, the pin bar or Doji, as discussed it today. Okay, remember what I said, Mr. Larry, that we do not make a decision just based on Doji candlestick pattern or pin bar candlestick pattern. It is just an additional confirmation. Remember, we have to look at the zone. If the market is at the zone, either resistance or support, or we can say either supply or demand zone, we have to look at the pattern formed. We have to look at the trend of the market. Candlestick patterns that we have just discussed are just additional confirmation on what we already know about the market, on what strategy we are using in the forex market. It's just an additional part of it. Now, sorry, if I can answer your question, maybe we should go back. Let me share my screen again. Let me share my screen again. Let's go maybe to Euro NZD. Euro NZD. Let's just look at Euro NZD. Euro NZD. Okay, where is it? Yeah, Euro NZD, Euro New Zealand dollar. Here is where we were before. You see this? You see this? Now let me give an example using this one. If you ask me where I would put my stop loss after seeing something like this, I would put my stop loss some few pips, maybe about at least 25 pips, 25 pips from the low of the Doji, the Doji candlestick pattern from here. I would put in my stop loss 25 pips from the low, which means from my end, my entry maybe will be somewhere there. From my end will be like 70 pips. Now that is too much. That is too much for people with smaller capital. But for a swing trader, that is not too much. For a swing trader, that is not too much, because a swing trader is a person with good capital, maybe from 10,000 USD, 5,000 USD and above. So to risk 70 pips to get about 900 pips. To risk 70 pips to get about 900 pips is not a big deal for a swing trader. See what I mean, guys? So you need to understand the risk, your ratio, your risk ratio. If it's 1, 2, or 3, if it's 1, 5 or 2, 5, to whatever ratio you want to use, but it has to depend on what kind or how much capital you have and your risk management ratio. So it's very important, guys, to consider that, because I know why would I put stop loss below this? Because I know the market. If the market has already made a breakout above the high of this daily candlestick pattern, under normal circumstance, it's not easy for the market to move down to this point. So I'll just wait for market to keep moving up. Then I'll just trail my stop loss. I'll just move my stop loss from this point to somewhere above my end. Let's say if the market is already somewhere here, I'll just keep moving my stop loss, so that if the market under undefined circumstance decided to move down, I will not be in loss. In fact, I will be in profit. The market will stop me in profit because I've already moved my stop loss above my end. You see, and the market is still moving up. So I'll be in profit if the market decided to move down to where it came from, or at the break even. So that is my point, and that is where I'll put in my stop loss. I think that is very clear. Another question, please. Someone is asking here. I can see someone is asking. Apart from such a pin bar and Doji candlestick on large time frame, how and where can we know the resistance and support in small time frame for us scalpers, please? Mr. Gellas, I think you have not gone through our previous presentation. We already covered everything about support and the resistance. We discussed the support and resistance in many ways. We discussed support and resistance using Fibonacci retracement and extension. We discussed support and resistance using horizontal line. We discussed support and how to identify support and resistance using moving average, especially 200 moving average. Now, if you go to those presentations, you might get all that answers that you need about support and resistance and how to identify support and resistance in smaller time frame. It's very clear, guys. Mr. Hellman is now saying, "I've got a question," so I'll give you a chance to ask your question, Mr. Hellman. Just wait a little bit. Mr. Chise is asking, so is Euro now in level 1 market move? No, we are not, Mr. Chise, we are not discussing about the levels of markets, because we have not yet started the real stuff. Remember, guys, we have not yet started the real stuffs. We are just discussing, we are just learning the simple stuffs here. Next week, probably from Wednesday, we might now start discussing the real stuffs, advanced training, advanced mentorship. We'll discuss about market makers codes, market makers methods, trend market strategy, and so many other stuffs. So guys, just calm down, just cool down, We'll come to discussion about those stuffs in the All right, guys. Okay. Let's see some other question here. Maybe I can give Mr. Hellman. Mr. Hellman, you can ask your question now. Yes, can I ask you a question, Mr. Hellman?
There are some pairs like GBP USD and Euro USD. If you put the small stop loss, it goes higher and higher. What about that? I've been experienced.
What do you mean if you put a small stop loss?
I mean, for example, I don't know how to put. For example, your example, you put above the last candlestick at the top there.
Yeah.
What I've been experiencing, if you put it goes higher more than that you put.
Okay. I don't know what exactly you mean, but what I can say is you need to understand the difference between stop loss, entry, take profit. Those are the most important things that you need to understand. You see, so stop loss, we set stop loss so that if the trade decide to go against us, we cannot lose more than that which we have already calculated. You see? So if you are saying that in Euro USD and GBP USD, if you put stop loss, that means if you put your stop loss, the market goes, move and hit your stop loss and keep moving against you. Is that what you mean, Mr. Herman? Do you mean that if you put stop loss in Euro USD and GBP USD, the market decide to move and hit your stop loss and keep moving against you? Is that what you mean? Mr. Altman is not online anymore. Maybe I can take another question. I can see Mr. Chris is asking, what's the common candlestick for reversal and when should we enter our order? You see, the candlestick pattern that we are discussing now, the candlestick pattern that we are discussing now are the common candlestick pattern for reversal. They are the one. That's why we are discussing them. We have pin bar, we have Doji candlestick pattern. We'll come to discuss about bullish engulfing candlestick pattern. We'll come to discuss about railway track candlestick pattern. We'll come to discuss about other candlestick patterns that are very common in the forex market. So the one that we already discussing about are the common candlestick pattern for reversal. Mostly, as I said, the mostly occurred one are pin bar. The shooting star, the pin bar, the hammer that you had mentioned are the different forms of pin bar. You see, those are the different forms of pin bar. Hammer, shooting star, and so on and so forth are the different forms of pin bar. You see, when we say pin bar, we are referring a group of candlestick pattern. We are referring those stuffs like hammer, shooting star, and so forth, and so on and so forth. Because we have hanging man candlestick pattern, we have hammer, we have shooting star, so many stuffs. Those are the different forms of pin bar. I think, Mr. Chris, you can understand that. You know, we have a lot of authors who have written a lot of books about this candlestick pattern. And since they want to fill their books, they have written different version of candlestick pattern. But if you come to combine those in one category, you will realize that this so-called hammer, shooting star, spinning top, and so on and so forth, they just represent, they are just in one group of candlestick pattern that is called pin bar. So you need to understand different forms of pin bar and so on and so forth. So it's very clear, Mr. Chris. So don't be confused by different authors of books because they have written them in different forms. Okay, any other question? Any other question, guys?
So here we talk on the
question.
So the random patterns
Mr. Lucas, I can see you are live. You can ask a question if you have a question. Okay. Question, guys? I think we do not have a question. All right. Okay. Maybe I should say this, guys. If you have not subscribed in the mentorship group, please make sure you do so. Why? Because when we start advanced mentorship, our advanced classes, we are not going to share the link in the general group, because I want to have only those people who have paid for mentorship, and it's just small amount, 12 USD, 12 bucks, very small amount. You know, there are people out there who are doing this for 300 USD, just mentorship, 300 USD, but I'm doing this to help you guys, 12 USD, because I want you guys to understand better about this market. So when we are many of us who knows better about this forex market, we can have a greater impact in the society. So God bless you guys. Today's presentation was wonderful. I just loved your the way you were active, and maybe we can meet now in the next presentation. Remember, from tomorrow we share analysis for next week. I have already started to share my analysis for the next week market. You can see in the general group I've already posted some analysis, but tomorrow I'll share more, and I want you guys to share more of analysis in the forex market. Share in the general group so that people can see what you know, and if you are making some mistakes in the chat, we can also correct you right away. God bless you. Have a wonderful weekend. See you next time.